If all of your investment portfolio is invested in a risky asset such as an agricultural platform, if anything goes wrong and they cannot pay you back when you need that money, then you're going to get into trouble and you're going to feel really bad. Hello and welcome back to the Investing in the Pandemic series. Now, if you read my blog post, How I'm Investing as a Millennial During this Pandemic, one of the sectors that I shared that I was investing in is the agricultural sector. And that is because we saw innovation coming in the past 5 years where we could invest on crowdfunding platforms and take advantage of opportunities in agriculture. Now, in the past few months, we've had a lot of discourse on social media due to the fact that some platforms have started to default on payments. And I guess the question now is, should I continue investing on these agricultural crowdfunding platforms? If you're thinking that, I totally understand that, because that's what everybody should be concerned about right now. But I think that a better way to think about it is to have the approach of an investor. Now, if you're investing in an investment opportunity that offers you a certain percentage in returns, it is usually clear if it is going to be high risk or low risk. Why? Because it is low risk, low returns. It is high risk, high return. So if you're going to be earning an average of 30 to 35% in an investment environment where the money market is about 3% or even 1.8%, then that is definitely high risk. And I think that as investors, we need to become aware of the risk that we are willing to take. And that's because there's a difference between the ability to take risk and the willingness to take risk. Two key different things. Now, you might feel that you are willing to take the risk, right? But are you actually able to take the risk? You might feel like you are able to take the risk, that means that if I lose money in this investment, I'll be fine. So you have the ability and you have the willingness. So you might have the ability and not the willingness. You might have the willingness and not the ability. But if you have both the ability to take risk and the willingness to take risk, then that's a good balance, all right, to approach investing on these agricultural crowdfunding platforms. Now, there has been call for regulation, and I totally agree. When you're soliciting for funds from the public, then there should be a regulator, because there's a huge chance that you can take advantage of the fact that there's nobody to back up your investors if anything goes wrong in your business, right? But one of the things I did during the pandemic was, basically invest in agriculture. And that was because we saw the global supply chain get disrupted. China was on lockdown as a country. Major economies like the US was also on lockdown. And because of that, the global supply chain got disrupted. And we saw that a lot of companies in Europe started to look to Nigeria to import farm agricultural produce. Now, Nigeria is a top country for certain agricultural products, such as ginger, sesame seed, and a lot more. And they also have good export value. For instance, we saw, the crop, for a crop like ginger, we saw the price in the international market increase, it was really premium, went up 2, 3, 4, 5 times in price because there was demand. And China is one of the top 3 producers of ginger, but they could not meet demand at that time. Now, a lot of countries started to look to Nigeria as a country to supply ginger. And there were companies that were ready to take advantage of that circumstance or that situation. Now, those companies needed to raise funds because it was clear. They had purchase orders from, countries in Europe that wanted to, procure these agricultural commodities, and they just needed to raise the funds to go, buy up the harvest or buy it up from those that have been stocking in warehouses and then ship it over the seas, to those countries. And we did see that the supply chain in terms of movement, in terms of transport and logistics, was really not as disrupted as air travel. So it was a great opportunity. So when they reached out to the companies that we work with in the Green Investment Club, we thought, okay, let us raise funds for this company. Now, we did raise funds from the company, we raised over 700 million naira for these companies to invest in, right? To invest in those companies. Now, did we know the risk we were taking? Absolutely. We are very aware of the risk we're taking. One of the things we do in our community is to assign a risk profile for every investment opportunity that we share. So there was clear risk. And for our community members of our community, we tell them that, look, you always have to have an approach to putting an investment portfolio. You always have to have your emergency funds or safety funds, and then you also have to have a growth portfolio, because As a young person and as a millennial investor, you do have to take some risk. There should be an element of risk assets in your portfolio, but it shouldn't be the entirety of your investment portfolio, because that's where the problem happens. If all of your investment portfolio is invested in a risky asset such as an agricultural platform, if anything goes wrong and they cannot pay you back when you need that money, then you're going to get into trouble and you're going to feel really bad. I mean, I totally understand and I empathize with everyone going through that right now, right? But I'm saying that this is a great way to learn, right? Because what we teach is have an approach to building an investment portfolio. Ensure that you have your emergency funds and a safety fund, have money invested in safe investment options, and then you can take advantage of some risky options if you do wish to do so. I have some clients that will tell you that they will not touch it with a long pole, and that is fine. We've seen, insurance companies, bring out disclaimers to say that, look, we do not guarantee investor funds. All we do is just, protect a bad crop yield, and we expect that the companies will take responsibility if anything else happens. And most insurance companies will tell you that the COVID or pandemic is an act of God, which they do not insure against. Of course, it's a tough thing to insure against. But as you make your decision to invest in any of these platforms, you have to be very sure you understand how that business works. What is the business model of this company? And this is, there's a lot more stakeholder, communication that is required for some of these companies, especially the ones that we believe are credible, right? How are your operations run? Are they totally local? Are you exposed to the risk of a government lockdown or some interstate tribal war? Are you exposed to that? Because if that happens, then that would affect the operations of your business and will put my investor funds at risk. Are you a global-minded organization? Do you export? Then what if something happens to disrupt the supply chain, right? How would it affect you? What if for some reason you cannot ship your produce to the country that you need to ship it to, and then something happens and they go bad, especially if it's not a dry agricultural commodity? What happens then, right? So we all need to begin to request for better risk management, but you should also know how to make investment decisions. So you do personal risk management in terms of investment portfolio, and then ask about how these companies are managing and mitigating risk. Now, when you find out all of this information, then you make a decision about what portion of your investment portfolio you will invest on those crowdfunding platforms. Because honestly, we are in a very low interest investment environment. Right now, the money market gives about 1.8% per annum or 3% per annum in terms of returns. And you might think that that is fine, but if you are in a country where inflation is double digits, about 13.2%, then you have to think about your options very, very critically. Because if you invest in a money market that is safe, the truth is you are losing money because the inflation is 13%. And then we also have the currency devaluation risk to add to it. So you do have to take some risk with your money, unless you're just fine with your money not doing or not working for you. But we can take informed decisions, right? Get into a community that will teach you how to take risk. And one of the things we do is we build relationship with the management of these companies, and we try to look into their business operations and their business model, and we say, how does this business work, right? How do your operations work? And then based on that, we bring a due diligence report to our members and say, this is how we think this business does business. Because the truth is, again, they are private businesses and we cannot insist that they share information with us, right? They would share if they choose to be transparent. And then based on how they choose to be transparent, we make a decision. Now, we always leave it open to you to decide if you want to invest or not. We expect that looking at your investment portfolio, you can tell how much risk you want to be exposed to. Okay, so that is how I expect you to think as an investor. Don't just say, oh, I'm ruling everything out. No, there are still good eggs in that industry, right? And let us help to grow the agriculture sector in Nigeria, because what that innovation has done is to expand the possibilities of the agricultural sector in Nigeria. So we have a lot more farms working, we have a lot more farmers getting good seeds, growing and earning income. So your investment is actually making an impact. All right, this is not an ad for any company, right, or any platform. We are always very, very, very transparent and open, and and independent in our opinions. But this is me saying that even as you carefully consider what platforms to invest in, think about these things. All right, I'll see you next week. If you have any questions or comments, meet me in the comment section. And guess what I'll be talking about next week? How I invested in real estate.